Let me share a quick story. When my wife and I were dating, we made a decision that completely changed our lives. We bought our first fourplex. At the time, it felt like a really big step, but that one property paid for itself and gave us the cash flow we needed to buy a second fourplex. From there, we even bought the house we live in today. But here's the best part. This isn't just something we did. I've helped lots of people take the same step by purchasing a duplex, triplex, or fourplex. If you're looking to get started with multifamily properties, 2 to 4 units are the sweet spot because they qualify for residential financing, something larger commercial properties don't offer. I'll explain why this matters, what you need to know, and how you can get started. So, why 2 to 4 unit properties? Anything larger than 4 units is considered commercial real estate. That means stricter financing requirements, higher down payment requirements, and shorter loan terms. But 2 to 4 unit properties are different. They let you use residential loans, just like you would for a single family home. You can use FHA loans with as little as 3.5% down if you live in one of the units. This is actually how we bought our first property. VA loans are 0 down if you're a veteran. Conventional loans are great for pure investments and can be used with small down payments or larger down payments. This makes 2 to 4 unit properties much more accessible. You can live in one unit, rent out the others, and let your tenants help cover the mortgage. It's an incredible way to start building wealth, even if you're new to real estate. Now that you know why 2 to 4 unit properties are such a great opportunity, let's talk about defining your focus. You need to ask yourself, are you buying for cash flow, where the rental income covers the expenses and leaves you with a profit? Or are you buying for appreciation, where the property grows in value over time? Once you have that answer, narrow in on the type of property and neighborhood. For example, do you want 2-bedroom units that are easier to rent? Are you targeting affordable areas or areas seeing strong growth? Or some upscale or luxury neighborhoods? Here's something important to understand. Some properties make a great investment, but might not be something you want to live in. On the flip side, other properties might be a great place to live in, but don't make much sense as a financial investment. This is why you need to be patient and clear on your goals. So, when the right property does hit the market, you can recognize it and move quickly. When my wife and I bought our first fourplex, we focused on affordability and rental demand. That decision made all the difference and set us up for our next investment. If you're not sure how to balance what makes sense as an investment and what works for your lifestyle, I can help you figure that out. The next step is to get pre-approved for financing. This is critical because it shows sellers you're serious and ensures you're ready to act quickly when the right property comes along. Here's my tip. Get pre-approved for the price slightly above your target budget. You don't have to spend that much, but it gives you flexibility to move fast when you find a great deal. If you're concerned about the intimidating loan payment amount, remember, the rents from the units should pay for the loan, and the income generated from the property will get added to your income, helping you actually qualify for the loan. If you're living in one unit, FHA and VA loans are excellent options. If you're buying purely as an investment, conventional loans are your best bet. And if this part feels tricky or you need a little help finding a great lender, let me know. I've worked with a lot of buyers to navigate financing. Here's where the math matters, because the numbers make or break your deal. You need to know 2 things. Number 1, the rents. What are similar units renting for in the area? Number 2, expenses, like taxes, insurance, maintenance, utilities, and maybe property management fees, and even vacancy rate. Now, here's an example. Let's say your fourplex rents for $6,000 a month, and your expenses total $5,200 a month. That leaves you about $800 a month in cash flow. At the end of the year, after you write off the interest and expenses, this example would be a major moneymaker. If this feels like a lot to figure out, don't worry. There are tools like rental calculators that make it simple, and I can help you run the numbers to make sure the deal works for you. Finding the right deal takes strategy. Build relationships with realtors, look for off-market opportunities, and check listings regularly. Once you've found the property, you'll need to do a few things. Verify the financials, okay? Make sure the rents are what they claim. lock in financing, review closing details like the settlement statements and prorated rents and disclosures. You'll still have the right to inspect the property like you would if you were buying a home. In fact, the steps for buying a 2 to 4 unit property are very similar to buying a home, with a few more steps because it is multi-units. Remember, that first property isn't just a purchase, it's the foundation of your next property and your long-term financial future. Like I said, this is what I do. My wife and I started with a fourplex, then bought another, and those moves helped us get into the home we're in today. Since then, I've helped lots of people buy their first duplex, triplex, or fourplex. If you're ready to take the next step, or you just want someone to guide you through the process, let's connect. I'd love to help you make it happen. If you found this video helpful, hit the like button, subscribe, drop a comment below, and thanks for watching. I will see you on the next video.